Hello, this is Mark Silverman, managing member and founder of Silverman & Associates, and I'm also a certified financial planner professional. I want to welcome you to the Saving with Silverman podcast. I'm glad you're here. Each week, we'll discuss different financial planning topics because making smarter choices about your money impacts the quality of your life.
Welcome to the show, everybody. Thank you for tuning in to Saving with Silverman, because making smarter choices about your money impacts the quality of your life. Thank you so much for listening to this show each and every week. We certainly appreciate your time here in the Tucson and Southern Arizona area. If you'd like to reach out to the star of our show, that is Mark Silverman, you could do so by calling 520-333-7601. Of course, you could call or text that to 520-333-7601. Get yourself on the calendar with Mark Silverman. Come in and sit down and have a chat about your specific, unique financial situation at Silverman & Associates. Mark is a certified financial planner professional and available to you by calling or texting 520-333-7601. And Mark, welcome. How are you, bud?
I'm doing good, Mark. Happy to be here. How are you?
I'm doing very well. Nice to talk to you today. Hope you've had a pretty good week.
So far, so good. No complaints.
Well, that's good. Well, we've got a lot of good topics to talk about today here on the show. We've got a kind of a chock full docket, if you will. So if you want, we'll just dive right in and get her rolling.
Let's get started.
All right. Sense of urgency. Very, very important, right, Mark? We talk a lot of times on this show about procrastination. As humans, it's easy for us to do, right? We're all guilty of it, whatever it is in whatever walk of life, your diet, whatever, right? We all procrastinate something. And in the financial world, when it comes to our issues there, procrastination certainly can get us into a lot of trouble. We talk about it a lot. So let's talk about a sense of urgency and some scenarios that might make you want to be a little bit more urgent about getting on with a financial plan and getting together with an advisor to make sure that you're on the right track, such as maybe the untimely loss of a job. You weren't expecting to retire when you did, or maybe you got laid off, whatever the case is.
Yeah, and that can happen. So that's, again, why we make it so important that you have an emergency fund. And again, 3 to 6 months of expenses should always be liquid, and in some cases for our retired clients, we'll even bump it up to 12 months. But that's why it's important you have an emergency fund to get you through in case something like that does happen, and things do happen. So again, that's why you have to have a plan. But certainly we have seen where people lose their job. Those things happen, and you just got to make the best of the situation until you can find another job or another good opportunity for you. But you got to be prepared.
Yeah, and obviously a lot of these things we're going to discuss here on this section, Mark, are maybe some things that are necessarily beyond our control. Some of I think it's going to be a little bit of both, but at the same time, having that plan in place ahead of time is going to help alleviate a lot of those woes that come with not being prepared at all in the event that, Murphy strikes, because that guy's everywhere, right? Murphy's Law will certainly get us. We discussed about maybe losing the job or maybe retiring early. What about that particular topic, Mark? Receiving that early retirement buyout offer, that might change things a lot.
It should. And, we do see that where, you get an offer where it also makes more sense to take that. Maybe your pension, maximizes at a certain age. And if you end up continuing to work, your pension actually goes down. We've seen those in certain circumstances. So making sure that you can maximize that. And if you are going to fully retire or you're going to maybe take another opportunity, that sort of thing. But analyzing the offer and what's the best way to do it. If there's a pension involved, do you take it just on your life? Do you take it on you and your spouse's life if you're married? Do you take a percentage or a certain guarantee at some point and then it goes up or goes down depending on what you decide to do? All these sorts of decisions, how does Social Security come into that mix? All these sorts of questions are things that we help our clients with.
Yeah, and how that factors into or may factor into your retirement plan can be a really big swing in either direction. So you want to make sure that you have, you're working with an advisor who can look at that whole situation and say, okay, here's the options, and then this is what might be the best avenue to go with, and really gets you some coaching advice or some help making sure before you do take that early buyout, and just making sure that you're checking everything off the way you need to. What about just the actual approachment date, Mark, of retiring? People start to get panicked. They get a bit of sense of urgency because, it's getting here faster than I thought.
Well, you need to make sure you're prepared, and that the day you decide to leave your job, that you're going to be able to stay retired. Or if you decide you want to work or do something different, it's what we call work optional lifestyle. I've said that before, working because you want to, not because you have to. But if you do decide to pull the plug on the job, that you're going to be okay, that you're going to have enough enough money and not run out for you, and if you're married, you and your spouse's life expectancy, and making sure you could do all the things that you want to do in retirement that you planned on. So it's really having a plan. The farther out you plan, the better off you're going to be. But we do have cases where people come in and they're retiring, in the same year. Sometimes it's in the same month. And so we don't have as many options. But at least if you have a plan, you know exactly what you can expect. And maybe you make the decision that, maybe you should bump it up and work a little bit longer so you can have the retirement you envision. Or for some people, they just want to get out and maybe they won't have as much in retirement as they anticipated.
Well, if you come in and you sit down, you're talking with an advisor, you're working with someone, and you get some of this data, some of these actual hard data numbers that you can work off of, it might also help you realize, okay, I may want to go ahead and have that approaching retirement date ready to go, but it's not going to be the right time, or I need to wait, or whatever the case is. Having that data is going to make a big difference in the decision that you make. And of course, working with a professional helps that.
Absolutely. The more information you have at your disposal, the better decisions you can make, the more educated decisions you can make, because these are big decisions. Some of these decisions you can change in the future. Some of them you can't.
Right.
Once you make that decision, it's done.
Yeah.
And so you want to make sure you're making the best decision for you and your family. Absolutely.
Well, you're listening to Saving with Silverman. We're talking about having a sense of urgency and not procrastinating when it comes to getting started with a retirement plan, or maybe getting a second opinion on a plan, or just taking some form of action that helps you ensure or find out even if you are going to be okay or retirement ready, if you will. 520-333-7601 is the number to call to talk with Mark Silverman, president of Silverman & Associates. 520-333-7601. Mark, death of a spouse, never an easy time. Certainly it changes the parameters, and certainly the urgency factor can get kicked up tenfold.
Well, and that's the thing. I mean, these are tough situations. It's tough enough to lose a spouse. It's another thing if that spouse doesn't know what's going on with the financial picture, or who the advisor is, or what they even own. And I've said this before. I've had people come in where they don't even know how to write a check. That's how uninformed they are about what's going on with their situation. And that's one of the reasons why we make it mandatory that if we start a relationship, if somebody's married, that both spouses attend the meeting, for just that reason. So, if maybe there's a pension that was taken a long time ago just on one spouse, if that spouse dies, the other spouse now needs to figure out how we're going to recreate that income. If they're both getting Social Security and one dies, yes, the other one gets the higher amount, but then the other one loses their benefit. So there's going to be a decrease there. So we need to figure out how we're going to keep their lifestyle and be able to maintain that lifestyle. So these are all decisions that we like to have in the beginning stages. But if you have just lost a spouse, there's decisions that you need to make, and you need somebody that's going to look out for your best interest and look at the whole picture, not just sit there and tell you to take all of your money and buy an annuity or buy a mutual fund or something like that. You need real answers, and you need real analysis to kind of work you through and educate you on the impact of making these sorts of decisions.
Yeah, definitely good advice there, and certainly something that you want to consider when we're talking about having a sense of urgency for anything when it comes to our retirement plan, but certainly the loss of a spouse. So, Mark, let's spend a couple of minutes on the hot topic thing, if you will. The market just continues to rumble along, right? It's just doing what it's doing. And when it comes to this sense of urgency topic, people might get lulled into I'm just going to keep riding along, and so they procrastinate, and maybe you're not really thinking about this realistically because, again, no one knows when it's going to take a correction or take a dip, but the inevitable is that at some point it will, and you need to be smart and not necessarily just continue to pump everything you have into it. At least
You're correct, Mark. Yeah, you can't be foolish with this sort of thing. So, if you're younger and you're, 20, 30 years away from retirement, does it really matter if the market corrects next year or the year after or something like that? Not really. But if you're within, 5 years of retirement or even in retirement, that could really derail your plans if you suffer a 30 or 40% loss. And I'm not trying to scare people, but let's be realistic here. This is the second longest bull market we've ever been in.
Exactly.
So with that being said, you should be protective in making sure that you understand the risks that are involved with the investments that you have. And your risk tolerance should match your investments as well as be on track for your goals. And without having a plan, you really don't know that. And so you're better off being safe than sorry, because a lot of people who were retiring, say in 2007, didn't realize that we were going to have a correction. And so some of those people ended up having to go back to work versus somebody who maybe did the planning and retired in, say, 2009, where the market's been straight up since then, so to speak, didn't have to go through that process. And we don't know when it's going to be. But I can guarantee one thing, we are closer to a correction each day. And so just be prepared, be in the know, understand the risks that are involved. I'm not saying to get out of the market, but you should understand how much you have in the market and how much you could lose if you are to maintain what you're currently doing. And most people don't even know how much risk they're taking. This is part of the process that we follow, where we can actually show people how much risk they're taking and compare it to their comfort level and their goals and show them the pitfalls of what they might have. It's just being aware.
Yeah, and as you pointed out, you're not saying necessarily just get out of the market, but let's be honest, with it being this high and carrying on this long, making sure that you're having a conversation with your advisor, whomever that is, to find out where you're weighted and how your risk is set up might not be the worst thing to do, because as maybe taking a little off the top or whatever the case might be a situation you want to at least consider, because we have a tendency as humans, we know that we're supposed to buy low and sell high, but what's happening? It continues to roll along. People are like, well, let me go ahead and jump back on for some more or whatever, and you're just not thinking rationally. And that's where coming in and talking with a qualified professional like yourself can help.
Absolutely, Mark. So the whole bottom line is it's greed, and greed gets the best of us. And so it's just being aware of those sorts of things. So here's what I have to offer anybody that's listening right now. So whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your chance to come in and have a conversation with me. I don't pawn you off on somebody else here in my office to go through this process we call the financial physical. I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. And like I said earlier, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets, and we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. And this will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware by now, I am a certified financial planner professional, and I believe the only local one here on the radio in Tucson. And the going hourly rate to meet with the CFP, such as myself, can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We do try our best to help everyone. However, our slots do fill up quickly. So I can only guarantee a complimentary meeting to the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Call or text 520-333-7601. Again, call or text to the number 520-333-7601 to get in touch with Mark Silverman and get started with the financial plan. Get started with a second opinion. Have a conversation about your unique situation. Just get yourself on the calendar. The whole topic here was about sense of urgency and not procrastinating. So let's not procrastinate. 520-333-7601. You'll certainly walk out with more information than when you walked in, and it's no cost, no obligation to get started. 520-333-7601. You are listening to Saving with Silverman. I'm Mark Killian, along with Mark Silverman. We'll be right back.
When you reflect on your life, what would you like to see as your fondest memories? Summers at your favorite vacation spot, ice cream with the grandkids after their first t-ball game. Maybe it was your great adventure across the world, or volunteering with a local nonprofit. Of course, those memories are still in the future, although they're not as far away as you might think. Be sure you have a financial plan to make them happen. Don't find yourself worrying while enjoying that ice cream. Peace of mind is attainable in your retirement. With the proper planning, you can secure a meaningful retirement. At Silverman & Associates, we can help you make those dreams a reality. Schedule your visit with our team today. Call 520-333-7601. That's 520-333-7601. We want to make memories with you. Get started by calling 520-333-7601. That's 520-333-7601.
Do you ever feel like you need Superman to help you with your financial crisis?
I've got you.
You've got me? Who's got you?
Well, we're not superheroes, but we can save the day when it comes to your finances. Keep listening to Saving with Silverman.
It's story time here on Saving with Silverman, because making smarter choices about your money impacts the quality of your life. Mark Silverman, certified financial planner professional. Tell us a story. Tell us about a time, please, sir, when someone came in to see you about making a decision related to their investments, and it took them a long time to make this decision, and it ended up causing them more harm, really, than it did good.
I could name a couple times, but I'd say, I had somebody who was they were heavily in stock in a company that they worked for. And I told them that they had too much in the one stock and they were getting close to retirement, and greed kind of settled in. They did end up not becoming a client. And so they had reached back out to me a couple of years later and actually had less money than they did when they initially met with me. They have since become a client, but they would have been better off if they had listened to me originally. But again, you can't kick yourself for what you coulda, woulda, shoulda. But they ended up coming back as a client with less than they would have if they initially would have engaged us. But that's, I don't put pressure on people. I just simply say, here's how we can help you. If you want to do it, great. If you don't, that's okay. My door is always open. So that was a case where, they didn't take my advice and they decided to continue doing what they were doing. And unfortunately, it didn't work out in their favor. Fortunately, now they're fine, but they would have been in much better shape had they would have initially listened to us.
Yeah, and we started off earlier in the show talking about one of those situations where people are like, if I had only called you sooner. So certainly one of those things you certainly want to make sure that you're taking action. You're listening to Saving with Silverman with Mark Silverman. Make sure you check out his website as well. A lot of good tools and resources there online at savingwithsilverman.com. We'll be right back with more after this.
Planning for retirement shouldn't be a mystery. So why is it so easy to get bogged down with financial terms and advisors who try to offer you a sales pitch? At Silverman & Associates, Mark Silverman and his team take pride in looking after their clients' best interests. Schedule a complimentary review of your situation. Call or text 520-333-7601. That's 520-333-7601.
Mark Silverman is a Tucson native, and his firm is right here in town. That means he's always accessible to you. Start your relationship with Mark and his team today. Keep listening to Saving with Silverman.
You're back with us here on Saving with Silverman, because making smarter choices about your money impacts the quality of your life. Thank you so much for staying tuned into the show. Mark Killian alongside Mark Silverman of Silverman & Associates. And we're talking about the worlds of finance and retirement here today on the show with Mark, who is a certified financial planner professional here in the Southern Arizona, Tucson area. And I forgot to mention before, but Mark's got a great website if you'd like to go by and check that out as well. There's a lot of good tools and resources. Get to know Mark a little better there as well. And it is savingwithsilverman.com, just like the name of the show, savingwithsilverman.com. Very cool website. Please go check that out, and I'm sure you'll find some useful things there as well. But don't forget, you can call him or text him at 520-333-7601. That's 520-333-7601. Mark, let's talk about the blame game a little bit. Obviously, in this environment that we tend to find our society in right now, it's certainly prevalent everywhere. TV, whatever the case, media, news, whatever. It's always typically political, but it's kind of in general, I think everyone just kind of points at somebody else for something. And so let's talk about some common things that people might blame for their financial troubles. We'll keep it in the financial realm since that's what you do, where the fingers may be getting pointed in the right and or wrong direction. And a lot of times that could be, well, I would be in a much better shape financially had my broker not done me wrong.
Sure. And, whether your broker did you wrong or not, you've got to make the best decision you can from this point forward. You can't, hindsight's always 20/20. So what I try to do is, I'd say one of the things people always say is, I wish I would have called you, a year ago. I heard you a while back and I wish I would have done something then. Well, you called now, and at least, something's better than nothing. And so I think it makes sense to not look and see what you could have, would have, should have done, but really, where are you now? Where do you want to be? And let's make the best decision from what we know now and this point forward.
Yeah, because we do have this tendency, and not to say that someone did something nefarious, it's just we have this tendency as people to go, well, I would be in better shape had this not happened, when maybe the reality is that we weren't keeping the eye on it that we should be ourselves. Granted, when we're hiring someone to do work for us, we expect obviously that work to be done, but at the same time, it's still your nest egg. It's still your life. You still want to make sure that you are firmly firmly involved with the process and understanding what's going on, at least have a good working knowledge anyway. A lot of times, as you like to say on the show, you want to make sure you're not in a situation where one side of the family or the relationship knows everything that's going on and the other one is in the dark. Certainly not a good way to go. But what about this old saying, Mark, and I know you've heard this a lot, well, I can never get ahead because the system's rigged towards Wall Street. The little guy just never comes up on top.
Well, the system's not rigged. There are people that can manipulate the system, day traders and things like that, but everybody has access to that information now, whereas years ago that didn't happen. But that's not what we're doing. We're not day trading and doing things like that. If you are working with someone who knows what they're doing, that can create a diversified portfolio with the right amount of risk for your goals and objectives and your comfort level, you're going to be in good shape as long as you understand that. It's not about having inside information or anything like that because, one, that's illegal, and two, if you know about it, then so does somebody else. And so it isn't a rigged system. There are probably things that we don't know that are going on, but I know, from my client's perspective and my perspective that this system does work. And if it's done properly, if you do the proper planning and saving and investing and have realistic goals, you could be successful and have a plan that's achievable so you can have a stress-free, worry-free peace of mind knowing that you're going to be financially independent and able to achieve the things that you're looking to achieve.
Yeah, because just like anything in life, right? Sure, things can feel like stuff is stacked against you, but we have a lot of great resources at our fingertips nowadays to take education, take empowerment onto us and work through problems. And even if that's with working with somebody else, again, not having to know everything. I am not good at building a deck, so I don't build a deck. But I certainly would call a qualified professional, but I would still be engaged in the process and want to make sure that I'm learning what I can about my deck so that I can maintain it and so on and so forth, things of that nature. So it's all about making sure that you are invested in your own future as well as making sure that you're working with a proper professional that's the right fit for you. If you'd like to talk with Mark Silverman to find out if that's a good fit between yourself and Mark, you can call or text him at 520-333-7601, 520-333-7601 if you're here in the Tucson, Southern Arizona area. All around, Mark can give you a hand. He's a certified financial planner professional. Been doing this for many years, really. Not to make you sound old, Mark, but you've been doing this for a while because you're definitely not an old guy. But definitely got a lot of experience on your side and certainly someone you can turn to. 520-333-7601. Maybe we'll shift this a little bit here on this one, Mark, for the blame game, and it's that we find ourselves in a situation where we want to help our kids be in better shape financially, Mark, or I would be able to, my retirement portfolio would be more where I want it to be if I wasn't trying to help my kids who just can't seem to get on their feet or whatever that might look like.
And that's a tough one. I mean, I get it. I have a 12-year-old daughter. And so, at one point you never want to let your kids down. But by the same token, you got to make sure you're not enabling them and you want them to be strong and financially independent.
Well, and it becomes cyclical, right, Mark?
Excuse me?
It becomes cyclical, too, because if you sacrifice too much, especially in the retirement years, it could come back around.
Yeah, and you could be enabling them.
Exactly.
And I've had this happen with clients. And I know it's tough having my own daughter. But by the same token, you don't want to create a bigger problem down the road. So if they're not making the best choices with money, you want to make sure that you're educating them and giving them the right advice, but knowing that they're there if you need them, but not to rely on you, especially if you're in retirement. That's a drain. And I've seen in a few cases where the kids have put the parents in a bad situation and it's not right. But certainly I do understand the other side of it too, that you don't want to let your kids down and you want to be there for them. So I think there's a certain amount of responsibility that the kids need to take and accountability as well.
Yeah, because we find ourselves more and more people too also falling into the sandwich generation crowd where you're taking care of your own aging parents and then you're also taking care of college graduated children, maybe in a situation where they're having trouble getting started. And my point was I think you've got to be careful. You want to help. We all want to help our kids. That's natural. But at some point, if you're sacrificing your retirement and you're close to retirement age, then you're going to lean on those same kids who are now leaning on you in order to get through retirement. So you wind up in this kind of vicious cycle. So it's a balancing act to make sure that you're doing the right things. And of course, working with a planner, a professional, someone who can help you kind of look at this from a higher view, if you will, to make sure we're making smart choices as well as emotional choices is certainly a good way to go. And Mark Silverman can certainly help you with that. 520-333-7601. Mark, what does this process look like? If we do want to reach out, we want to get started and just get that opinion, that second opinion.
Sure, Mark. So just like you get a second opinion on your health, why wouldn't you get a second opinion on your wealth? Whether you're do-it-yourself or already working with someone, this is now your chance to go through this process, and we call it the financial physical. Do you know what your investments are costing you? If you're still working, are you on track to have the type of retirement you've always envisioned? Or if you're already retired, do you know if you or your spouse are at risk of running out of money while trying to maintain your current lifestyle? I can assure you, I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. In this initial meeting, we'll address issues of importance to you, provide an overall view of your situation, and give you some general advice on what needs to be completed. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. Just as you want to reach a healthy life from a physical standpoint, you also want to reach and maintain great financial health. So our financial physical is just what the doctor ordered. We do try our best to help everyone, however our slots do fill up quickly, so I can only guarantee a complimentary meeting for the next 5 people that contact us right now. Please don't procrastinate because making smarter choices about your money impacts the quality of your life.
Okay, 520-333-7601 is the number to call or text to take advantage of this great offer from Mark. Be one of the next 5, as he just mentioned, to call or text 520-333-7601. It's a great opportunity to get started and make sure you're on the right path towards retirement with Mark Silverman, certified financial planner professional here in the Southern Arizona and Tucson area. 520-333-7601 to get this comprehensive financial review underway, no obligation. Again, call or text the next 5 folks, 520-333-7601. And you can also stop by the website at savingwithsilverman.com, and we'll talk more about that in a little bit here on the next section of Saving with Silverman.
Life is complicated. It's full of twists and turns and complex issues. The last things you need when planning your financial future are confusing numbers and advisors who just offer you a sales pitch. We believe there's a simpler way to invest. Your financial plan should be built on a plan that's made just for you. It's all about discovering your goals and designing a strategy that will help you get where you want to go. And don't worry, we'll track your progress along the way. Stop wandering your way through your investing life. Come in for a visit today. To schedule a visit, call or text 520-333-7601. That's 520-333-7601.
Have you ever heard that story about the grasshopper and the ant? You know, the one where the grasshopper fails to plan in the spring and almost starves to death in the winter? Learn from that. Don't wait until it's too late to get your finances in order. Start your path to a rewarding retirement today. Keep listening to Saving with Silverman.
We're moving along nicely here today on Saving with Silverman. Thank you so much for staying tuned into the show. Mark Killian alongside Mark Silverman, certified financial planner professional, available to you here in the Tucson, Southern Arizona area by calling or texting 520-333-7601. That is 520-333-7601. Call or text Mark. Get yourself on the calendar. Come in and have a conversation about your unique, specific financial situation and find out where you stand for retirement. Mark, so let's talk about the fourth quarter planning, if you will. It's football season as well, and I know that you're a sports guy, but it's also the fourth quarter of our fiscal years or financial years for most of us. And as we head into the fourth quarter, let's discuss some key financial matters that retirees and pre-retirees should maybe be focusing on. I don't know if I want to say a bit more, but since it's the fourth quarter of the year, maybe you should. Like evaluating your IRA and your Roth contribution options.
Yeah, I mean, that's a good point. I mean, and like you said, it's hard to believe that we're already, almost into the fourth quarter here, and this year is going to be by, and a lot of people that procrastinate, next thing you know, it's going to be 2018. But I think, if you're able to contribute to an IRA or a Roth, if you have those options available, talk to your tax professional, your CPA, and figure out if you're able to do those sorts of things, because that'll just benefit you in the long run. So I think it's always important to look at those sorts of things before the end of the year. Some of those you can do in the first quarter or, before April 15th of next year. But why not do some planning now? Because that can fast approach once the year gets started as well.
Yeah, and obviously we're all always looking for opportunities, if you will, for increased tax deductions. Some ideas or some things to think about that in the fourth quarter of the year versus maybe some other time, or.
Yeah, I mean, anytime you can, whether you're donating, clothes is a big one, wherever you decide you want to do that. Making sure that you have those tax deductions if you have certain organizations that you feel strongly about, making sure you're giving to those on a regular basis to not only help those causes but actually help your tax consequences too. I know with a lot of school credits, I know we do that with my daughter's school and pay for some things that way by giving money in those causes. So if you could do that with your children, grandchildren, etc., that's always a great idea.
Yeah, absolutely. And there's so many different things that you could look at to increase your tax deductions. But again, working with a professional is certainly going to help you, get some more information, make sure that you are doing the right things in that regard. If you'd like to talk to Mark, it's 520-333-7601. We're talking about fourth quarter planning here on Saving with Silverman, some ideas and some things to think about, whether it's evaluating the IRA or Roth contribution options, or, like I said, looking for opportunities for maybe charitable donations to increase those tax deductions. What about offsetting our gains, Mark, with losses in the investments?
Yeah, and that's a good one. I think for most people, though, most people don't know how to do that.
Okay, sure, yeah.
And the term is actually called tax loss harvesting. So this is something we do with our clients, which basically means that we're having the account grow, but because at the end of the day, it doesn't matter how much you make, it's how much you make after fees and taxes. And so depending on how you're doing things, that could be minimized if you do it smart. But again, that's something that you really need a professional to do. Most people, unless you're an advisor that specializes in this, or you're a CPA or something like that, you're not going to know how to do that. But this is a service that we actually provide for our clients, which is huge, because depending on what the taxable situation is, you could be giving up a big portion if it's done incorrectly. But, offsetting gains and losses is very important.
Yeah, I couldn't agree more. Always make sure, folks, that you do check with a qualified professional before you do take any action. But there's a lot of little things inside of fourth quarter planning, little things to just think about, little tips and tidbits to consider. Doesn't always have to be something maybe as complicated as the topic we were just discussing there with the offsetting the gains and the losses on the investments. What about, Mark, just maybe going ahead and doing some of the little things like getting that current, most accurate update that we have possible for, let's say our retirement income streams, maybe our pensions or what our Social Security draw might be, that type of stuff?
Sure. So if you're lucky enough and fortunate enough to have a pension, reach out, and you're getting close to retirement, reach out and see what those numbers look like now and get them in different options. If you took it just on your life, if you're married, what would it look like for both you and your spouse to be covered? There's different 50%, 75% survivor benefits. Sometimes they'll offer a higher amount for 5 years and then it goes down. You want to see what all the different choices are before you make that decision. With Social Security, they don't send the statements out every year anymore. If you go to ssa.gov, you can register for an account and you can get those amounts and see what those numbers look like at the different ages and what you're going to be eligible for you and your spouse. So that's always important to do as well.
You're listening to Saving with Silverman. I'm here with Mark Silverman, and I'm Mark Killian, your host. And of course, Mark Silverman is a certified financial planner professional. We got a lot of Marks and a lot of Silvermans on this show here, so stay with us here on the show. We're having a good time today talking about fourth quarter planning, discussing just some ideas, some things to consider as we're moving into the final part of the year, which, Mark, as you said, it's kind of crazy that it's already there, but it is what it is, right? Time continues to fly right on by. So
time flies when you're having fun.
That's true. That is very true. So if you'd like to reach out to Mark and talk with him about some fourth quarter planning, it's easy to do. Give him a call or give him a text at 520-333-7601. Again, call or text, whichever one is more convenient for you, 520-333-7601. So we talked about maybe getting the updates on the estimates for our income streams, If you haven't created a plan or a schedule to pay down debt or to work on paying down debt, it'd be a good time to start. There's never a bad time, but certainly it would be a good time to get started working on that debt-free plan, if you will.
And that's one of the things that we discuss because, you can't have debt in retirement. Some people choose not to. If it's credit card debt, that could be tough to maintain in retirement. But, more importantly, probably like a mortgage, does it make sense to have a mortgage in retirement? We have clients that do. We have some clients that don't. So it's just creating the cash flow to cover those expenses and that sort of thing. So it's really having a plan. And if you are going to carry debt into retirement, how are you going to pay that? Do you have enough income? And those sorts of things to cover those expenses. It's, again, I'll just go back to kind of what you said, Mark, is having a plan. And if you don't have a plan, you don't want to just wing it and retire and then hope it all works out. You can't do that. You owe it to yourself and to your family to make sure that you're doing everything possible and you have a well laid out plan that's going to cover all these different things that we've talked about, including things that we haven't talked about. We didn't talk about healthcare and long-term care and those sorts of things as well. But these are all things that you need to take in consideration.
No, absolutely. You're correct. There's so many pieces to consider. Obviously, here on the show, we try to give some general broad topics and discuss and work our way through, but there's so many facets that you could really dive into, certainly more than we can do in an hour-long program. But if you'd like to have a conversation with Mark about something that's more specific to you, maybe that's a topic that we didn't touch on or one that does tweak your interest, give Mark a call or text him at 520-333-7601. Mark, we'll maybe finish off then with rebalancing. Good time in the fourth quarter to rebalance that portfolio and ensure that you're weighted the way you want to be and that you're as diversified as you need to be?
Yeah, rebalancing is very important. And, that's something we do for our clients. And, hopefully if you're working with an advisor, they're doing that on a regular basis as well. Where we see people aren't doing it is typically with their 401ks or, whether it be a 403b, a TSP, their savings plan or whatnot, making sure you're rebalancing at least once a year. So if you have a certain allocation, making sure that you're redoing that allocation at least annually, if not more. And that's an important thing to do. And if you're not working with someone, you need to make sure you're doing it for yourself. And if you are working with someone, you need to make sure they're doing it for you too. But rebalancing is important, especially given where we are in the market. You don't want, the stock markets have run up, so chances are you probably have more in equities than you do bonds. And so you want to make sure that you're rebalancing that allocation to get it back to where it should be.
Well, if you find yourself in the fourth quarter of whether you're a football fan, whether it's fourth quarter of the year, whatever the case is, but you find yourself thinking, I need to get some fourth quarter planning going, Mark is going to be able to talk more specifically about that and get you started down the right road.
Yes, Mark. So here's another offer again. Whether you're a first-time listener to the show or you've heard me for a long time, if anything I've said makes sense or resonates with you, this is now your opportunity to come in and have a conversation with me. I don't pawn you off on somebody else, to come into my office and go through this process we call the financial physical. I can assure you I will not be trying to sell you investment or insurance products. I repeat, this is not a sales meeting. This is actually much different than everything else that you hear on the radio from all these other financial shows. Rather, we're going to discuss your values and goals in a way, honestly, you probably never have. This consultation is designed for both individuals as well as couples. However, if you are married, it is mandatory that both spouses attend this initial meeting. So whether you're still working or already retired, this is a great opportunity to see what it looks like to work with someone who's actually required to have a fiduciary responsibility to look out for your best interest at all times. And as part of the financial physical, we will discuss your cash reserves, debt if you have any, insurance, all types, and how to best allocate your assets. And we'll even benchmark where you are now financially compared to where you want to be, so you have an even better perspective of what's required to achieve your goals for the reasons that are important to you. And this will become the foundation for developing a plan that gives you the highest probability of making that happen. This meeting will be valuable to you whether or not we decide to work together. There is no cost or obligation for this initial appointment. However, it is best suited for people who have saved at least $250,000. And as you probably are aware, I am a certified financial planner professional, and I believe the only one locally here on the radio in Tucson. And the going hourly rate to meet with a CFP such as myself can cost as much as $300 an hour. So this is a tremendous value and chance to finally get your financial house in order and keep it that way. And your only commitment is an hour or so of your time. We try our best to help everyone, however, our slots fill up quickly. So I can only guarantee a complimentary meeting for the next 5 people that contact us right now. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Call or text 520-333-7601. That's call or text 520-333-7601 to get started today with certified financial planner professional Mark Silverman of Silverman and Associates. 520-333-7601. And don't forget, if you'd like, go by the website. A lot of great tools and resources as well at the website savingwithsilverman.com. It's a great way to get to know more about Mark and his firm. Go by the website savingwithsilverman.com. Check him out online. And as always, don't forget, call or text 520-333-7601. We'll be back with more Saving with Silverman after this.
Did you know that Mark Silverman and his team offer a complimentary Get Acquainted meeting where you can learn more about what he can do for you? The goal is to determine whether you might be a good fit for each other. That's because the folks at Silverman and Associates are all about building long-standing relationships. They aren't offering you a slick sales pitch or a get-rich-quick approach to retirement. Instead, Mark offers a simpler approach to investing. It's based upon your goals, and his strategies are tailored to your needs. To find out more about his unique planning process, call or text 520-333-7601. That's 520-333-7601.
It's time to get to know Mark Silverman just a little bit better here on Saving with Silverman.
Well, it's getting to know you time here on Saving with Silverman. This is that part of the show where we step away from the financial chatter for a moment or two and get to know Mark a little bit better outside the financial realm and get to peek into his personality a little bit. Mark, I kind of know the answer to this, but I'll ask it for our listeners out there. I know you're a sports guy. I know you're a local guy, hometown guy. So let's talk about sports teams. Who are your favorites? And I don't know, give me maybe a couple of college, a couple of pro, a couple of sports, whatever you really just jumps out at you.
College is easy. Graduated from U of A.
Okay.
I follow football and basketball. At this point, I'm looking forward to basketball more so than football, the way things have been going. But U of A is easy. But as far as professional, and I grew up and born and raised here in Tucson, and growing up, we didn't have the Cardinals. They weren't even here yet.
Right.
My mom's side of the family is from Chicago, so I have always been a Chicago Bears fan, a Chicago Bulls fan. Bulls fan was a lot easier when Michael Jordan was there, certainly. Yeah. So that's been a little tougher, and I like the NFL more than I do the NBA, it seems like, and I like college more than I do professional sports. So, the Bulls and Bears have been my professional. I'm not a huge baseball fan. I guess I do root for Cubs and White Sox.
I was going to say, were you excited about the Cubs when that happened?
Yeah, I was rooting for them. I'm not a huge baseball fan. I watch a little bit of hockey. I like the Blackhawks if I am watching hockey. Chicago teams, but college, certainly U of A.
Okay. Well, football right now, you definitely then have an uphill climb.
No, the Bears are horrible.
As I said, you definitely got an uphill climb, right? There's a lot of work to be done. So,
they're horrible.
Yeah,
they're horrible.
Yeah, I hear you. Well, there you go. That's our getting to know you for this week. Mark is a hometown guy, but when it comes to the NFL, at least anyway, he's got his heart in Chicago. That's getting to know you here on Saving with Silverman. We'll be right back.
Mark Silverman is a lifelong Arizonan, and his firm is based right here in Tucson. When you come in for a visit, you can expect someone who's familiar with your community. At Silverman and Associates, our relationship with you is most important to us. We want to build you a financial plan that's unique to your goals. No generic products, no corporate red tape, just friendly folks looking to give you a comprehensive approach to retirement planning. Come in for a visit today and let us help you build a meaningful retirement. Call or text 520-333-7601. That's 520-333-7601.
You finished school and worked hard to get your first job. You told yourself you'd save for retirement, but that old jalopy you bought when you were 16 broke down, so you bought a new one. You started to save, and soon you bought your first home. Then came pets, kids, and your world changed some more. You worked hard to provide for your family. You made sure your kids got a good education. You might be sending them to school right now, or maybe it's the grandkids' turn. And of course, you're now making sure your parents are looked after. Through the years, you lovingly sacrificed for your family. Now it's time to take care of you. Love others well by taking care of yourself. Keep listening to Saving with Silverman to discover how to build a financial plan that'll continue providing for you and the ones you love for years to come.
You're back here with us on Saving with Silverman. We are cruising down the home stretch today. Thank you so much for staying tuned into the show, because making smarter choices about your money impacts the quality of your life. And if you'd like to reach out to Mark Silverman, who's a certified financial planner professional and president of Silverman & Associates, you can do so by calling or texting him 520-333-7601. Again, call or text 520-333-7601 right here in the Tucson and Southern Arizona area. And it's time for the request line. We take questions from around the area. If you'd like to submit one, go to savingwithsilverman.com. That is savingwithsilverman.com. We'll take the best questions throughout the week, ask them on the air, and of course, if you don't want your information read, we certainly will not do that, but go to savingwithsilverman.com. And our first one is from Trixie. There's a name you don't hear much anymore. That's a cool name. I like that. Trixie in Vale. Trixie says, Mark, I am being forced into early retirement at 57 from my job with the state. I'll have my pension, but that alone will not be enough to live on. Do I need to find another job since I'm too young for Social Security, or to withdraw from my IRAs?
Well, great question, Trixie. It depends on really how much you need in retirement. Looking at what your pension is that you're able to get, Social Security, typically you could take it as early as age 62. As far as withdrawing IRAs, you need to be typically 59 and a half. There is a rule, which is called the 72T, which would allow you to draw from your IRAs prior to 59 and a half while avoiding the 10% penalty. You still have ordinary income taxes that are due, but that may be an option as well. We've done that with some people in that circumstance. So it's really looking at the overall plan, looking at your life expectancy, what you want to do in retirement, how much you might need to spend, and looking at all those factors to see if you have enough, or should you go out and do something else and get another job and supplement that income, and so you can take these other income streams later on. So it's a great question, but it's again kind of hammers down the point of why you need a financial plan to make sure that you're going to be financially successful, financially independent, to do all the things that you want to do, so you're not forced at age 70, 75 to go out and have to find another job because you're in danger of running out of money.
Yeah, really good question, Trixie. We certainly appreciate it. Very sorry to hear about the forced early retirement, but I do like, Mark, that she's thinking. Obviously, she's already, well aware of the fact that she's too young for the different things. Obviously, great piece of advice from you there with that little nuance that you certainly want to check out, Trixie, and find out how that may or may not work for you, but you certainly got your head on and going in the right direction. So definitely reach out to a qualified professional such as Mark Silverman if you'd like to get more information or figure out the best strategy for you. 520-333-7601, 520-333-7601. Okay, how about Sam in Green Valley? Sam says, Mark, I was always told that I would be in a lower tax bracket in retirement, and I should be putting as much money into my 401k as possible. Now I'm retired and I'm not in the lower tax bracket, and all of my savings are going to be taxed as ordinary income. What went wrong for me here?
Well, Sam, you are absolutely right. I couldn't agree with you more. And it's unfortunate because, when I started in this business, I've been doing this over 20 years now, 22, I think it is, 22, 23. But when I started this business, we were told, people put money in their individual retirement account. They get the tax deduction at that time. It's going to grow tax deferred. And then when you take that money out, you're going to take it out because you're going to be at a lower tax rate because you're no longer working. And unfortunately, that's not always the case as you're experiencing. Tends where you don't have as many deductions, the kids are gone, maybe you don't have a mortgage anymore, so you don't have that deduction, so you have very, very little deductions that you can take. And if you have a pension, if you're lucky enough to have a pension, and you have, Social Security coming in, and then you have to start taking your required minimum distributions, unfortunately, you could be in a higher tax bracket and because you don't have those deductions. So the reality is what you're going through, we see quite often, and we were told that it would be otherwise as well. But again, that just has to come with experience and seeing that that's the case. And so you are right. You're not missing anything, but that a lot of people are in the same boat. I know that doesn't make you feel any better, but that's the reality, unfortunately.
Well, great question. We certainly appreciate it. If you'd like to reach out to Mark, again, don't forget it's 520-333-7601. You can call or text 520-333-7601 to call or text. And again, great question. We certainly appreciate it. We've actually got one extra one this week. We're going to squeeze one more in from Amy in Ore Valley. And she says, Mark, do you have a good recommendation, good rule of thumb, something along those lines on how much cash I should have on hand at all times?
That's a great question. So as a certified financial planner professional, the rule of thumb is you should have 3 to 6 months worth of expenses that should be liquid at all times. And what I mean by that is it should be in something that doesn't have any fees or surrender charges, penalties to get out of. That could be sitting in your checking, your savings, your money market. It could be in a safe or safe deposit box. It could be, buried in the backyard under your mattress. As I tell people,
That's right.
It pays the same as the bank, and it's easier to get to, less
Coffee
hassle.
can in the freezer.
Yeah, there you go. You could use, if you have a home equity line and you want to access it that way, that could be an option as well. But anything that you can get to, but you do need to have 3 to 6 months worth of expenses liquid at all times. My advice is if you're retired, in a lot of cases, we actually err on the more conservative side. So my clients typically will have at least 12 months worth of expenses liquid at all times if you're retired. So depending on if you're still working or retired, I'd say the minimum would be 3 months. Average would probably be 6 months. But if you're retired, you may even want to have 12 months worth of expenses that should be liquid at all times. And I'll give you an example. Let's say your expenses are $4,000 a month and you're retired. 4 times 12, you should have $48,000 thereabouts. Say $50,000 should be liquid that you can get to if you need to. If you're still working, maybe that number is $25,000. So, that's kind of a good rule of thumb. And I think that makes a lot of sense. We find people are either in the extreme, whereas they have too much in cash, where you're losing purchasing power because of inflation and you're losing purchasing power. So that's a problem. Or we find that, maybe somebody's been sold a bunch of investments and they don't have a lot of liquidity. And that can also be a problem because then you have fees and penalties in order to get to your money. And so there is a happy medium, and those are the guidelines I would follow.
Great question, Amy. Thank you so much for that. We certainly appreciate it. Really good advice from Mark as well. 520-333-7601. Again, 520-333-7601. And our final question for this week, Mr. Silverman, is from Tony in Saddlebrook. And Tony says, Mark, I've always handled my retirement planning without any professional help and seem to have done just fine. But is there anything important that somebody like me might be missing?
Well, Tony, that's a great question. And we have a lot of times where people will come in that have been doing it themselves, and some are doing a better job than others. But I can tell you, if this is not something you're doing day in and day out, there's lots of things that you have thought about maybe that are concerns, and there's lots of things you haven't thought about that are going to be concerns that you just aren't aware of. So that's why it's important you work with a professional, because unless you're doing this day in and day out, like I said, it's a very difficult job, and there's lots of pitfalls that we typically see people fall into. If you're just focusing on the investment management, that's just one piece of the puzzle. And if you are handling that part, great, but you should be looking at it each and every day. If you're not, then you need to outsource it or hire somebody to do that for you. Same thing is true with your financial planning. Are you looking at healthcare? Are you looking at taxes, insurance, all these different things, your income plan, inflation? There's lots of things that are involved that you need to be aware of. And if you are doing it yourself, great, but you do probably at least want to interview somebody that can look at the whole thing and kind of have that conversation with you. Then you can make an educated decision of whether you want to learn all that information and try to do it yourself, or you want to hire somebody that's going to help you with that and help you solve those problems. But great question. The fact that you reached out, I applaud that. But there are a lot of things out there that and I don't know what you're doing or what you're not doing. And I wouldn't know that until I had an in-depth look as far as what you've done. But thanks for reaching out.
Well, Mark, if Tony or Sam or Trixie or Amy or any of those would like to reach out, what's that look like?
So now that I've answered some questions, now I have a question for you. So here's a simple question, and can you answer it honestly and objectively as possible? Aside from the happy hellos and how's the family, and aside from the occasional lunch or golf game, I mean, I get it. I'm as much friends with so many of my clients, they become true friends over the many years. But I think the question has to be asked, especially in light of the stakes. Is your current financial advisor truly adding value beyond a doubt? And I'll repeat, is your current financial advisor truly adding value? It's a valid question, as a friendship or just relationship allows you not to be in a position to ask those critical questions. Are you talking about taxes? Are you talking about Social Security and income and diversification and insurance and estate planning and healthcare? Are you having those annual reviews? But hopefully it's more frequently than that. Is there detailed follow-up? Is there accountability? If you are, if all of that is happening, congratulations, because you've got a great relationship, and send your financial advisor a thank you. But if you're not, If you're not having that, if you're not feeling the value, if you're not having these in-depth conversations, then you owe it to yourself and really to your family to have a conversation with someone else, because if you don't, you're the one that's going to suffer. You're the one that's going to pay the cost, and it'll cost you in more ways than you'll ever know. Let us prove to you how we can help your money go further in retirement. Let us show you with our financial physical. I believe you'll be surprised at what you'll learn, and this won't cost you anything. Give us a call or send us a text to 520-333-7601, 520-333-7601. That's 520-333-7601, or check us out online at savingwithsilverman.com. That's savingwithsilverman.com. Please don't procrastinate, because making smarter choices about your money impacts the quality of your life.
Retirees, pre-retirees, great chance, great offer from Mark Silverman, certified financial planner professional at Silverman & Associates. Call or text right now, 520-333-7601. That's 520-333-7601. Get yourself on the calendar, come in for that consultation with Mark, and find out if we're on the right path towards retirement. 520-333-7601 is the number to call. You've been listening to Saving with Silverman. Mark, as always, thank you so much for being here on the show. Certainly appreciate your time and your wisdom.
Absolutely happy to be here, Mark, and I want to thank everybody for taking the time to listen. Please drink plenty of water and stay cool out there.
Absolutely, and we'll talk to you next time right here on Saving with Silverman. Before we depart, don't forget, call or text anytime, 520-333-7601. This has been Saving with Silverman.
Silverman & Associates Wealth Management, LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, product, service, or investment strategy. Investments involve risk and, unless otherwise stated, are not guaranteed. Be sure to first consult with a qualified advisor, tax professional, or attorney before implementing any strategy or recommendation discussed herein.